Welcome back to the channel, guys. Another week has gone by and we have some exciting breakout stocks to discuss. Without wasting any time, let's jump right in. So the first stock on our list today is Alamos Gold Inc. with the ticker symbol AGI. I have opened the chart on the monthly time frame, and before anyone thinks that the monthly time frame might be too large for their trading style, let me clarify that the breakout has happened this week. Given the sheer amount of time it has taken for this stock to reach this level, I had to open the monthly chart to show the full picture. But rest assured, this is a very fresh breakout and we will break it down in detail. Now, looking at the chart, this stock made a high of $21 back on January 3rd, 2012. Since then, it has been stuck in consolidation for 13 long years. Yes, you heard that right. 13 years of sideways movement without ever breaking that high. Can you believe that? And finally, just this past week, the stock has given a decisive breakout, crossing its key resistance and now trading at $22.18. I also want to point out that there were two previous breakout attempts, one in September 2024 and another in October 2024, but both failed as the stock couldn't sustain above the resistance. This time, however, things are looking different. The breakout appears strong, and the stock is firmly trading above the resistance, indicating that it could potentially continue its uptrend from here. Now, let's take a look at its historical movement. If we measure the dip from the all-time high, the stock had lost about 88% of its value at its lowest point. But now it has gained strong momentum, and with the breakout confirmed, we could start seeing new all-time highs soon. This makes it an extremely interesting stock to keep on your radar. Another important factor to consider is its technical indicators. The stock is currently trading well above its 50-day exponential moving average, which is a very strong bullish signal. The EMA has historically acted as resistance during this long consolidation phase, but now that the stock has decisively moved above it, it indicates a shift in trend. So what should you do now? If you're a breakout trader, this is definitely a stock to keep an eye on. If it continues to hold above the breakout level and gains further momentum, we might see a strong continuation to the upside. On the other hand, if it fails to hold above this level, then we'll need to reassess whether it was a false breakout or just a temporary pullback before moving higher. Either way, the stock has now entered a new phase, breaking out of a 13-year resistance, and it will be very interesting to track its momentum in the coming days. So make sure to keep this stock on your watch list and observe how it moves from here. The company we just discussed is Alamos Gold, ticker AGI. They're in the business of exploring, developing, and extracting precious metals, with operations spread across Young-Davidson, Mulatos, and Island Gold. Now let's get into the numbers. AGI has a market cap of around $9 billion, putting it in the mid-cap category. They pulled in $1.23 billion in revenue and $243 million in profit, giving them a profit margin of 19.89%. The PE ratio stands at 36.95, with earnings per share EPS at 60 cents. If you're in it for dividends, they're offering a 0.45% yield. Nothing massive, but a little something extra. All right, moving on to the second company on the list today. I have opened the chart on the weekly time frame, and the company we are discussing is SS&C Technologies Holdings with the ticker symbol SSNC. So let's take a deeper look at this stock and analyze the breakout. Looking at the chart that I'm sharing right now, you can see that the stock made its high on January 10th, 2022, and since then, it has been consolidating below this price for 3 long years. While it's not as prolonged as the consolidation we saw in the first stock, 3 years is still a considerable amount of time for a stock to remain stuck below a previous high. But now, after this extended period of consolidation, the stock has finally given a breakout, and what's even more interesting is that the breakout candle looks strong. Let's go over a few key points. First, let's check the exponential moving averages. The stock is currently trading above both its 50-day EMA and 200-day EMA, which is a positive sign and confirms that it is in a strong uptrend. No problems there. Now, looking at the historical move after making its high in January 2022, the stock dropped by approximately 47%. That means at its lowest point, it lost nearly half of its value, but now it's showing strong recovery momentum. So, the big question, what should be the strategy for this one? Well, like I always say on this channel, if a stock hasn't moved too much after giving a breakout, a small position can be considered. That's my personal preference. But if the stock has already moved significantly after breaking out, then it's much wiser to wait for a pullback or breakout retest before entering. Now, in this case, the resistance was around $84.76, and the current market price is $86.71. So if you calculate, the stock has moved only about 2.5% since the breakout. For me, this still fits within my risk appetite, so I personally wouldn't mind taking a small position here. But of course, there is always the possibility that the breakout fizzles out and turns out to be a fake out. If that happens, I'm prepared to take a 2 to 3% loss on my position. However, if this breakout sustains and the stock makes a new all-time high, then the potential for significant profits is there. That's my personal approach to breakout trading. But I want to emphasize something important. You should always trade based on your own style and preferences. Never follow a strategy blindly if you haven't practiced it or if you don't fully believe in it. The final decision is yours and yours alone. For now, I would just suggest that you add this stock to your watch list, track its momentum, and let's see how it behaves in the coming weeks. If it continues to hold above the breakout level, this could be an interesting one to keep an eye on. The company we had a discussion on is SS&C Technologies, ticker SSNC. They develop software solutions for financial services and healthcare, operating across the United States, Europe, the Middle East, Africa, Asia Pacific, and more. This is a large cap company with a market cap of $21 billion. Last year, SSNC generated $5.76 billion in revenue, pulling in a profit of $706 million, which means a profit margin of 12.26%. Their PE ratio is 31.03, and their EPS is $2.79. Dividend investors might like this one as they offer a 1.13% yield. All right, moving on to the third company on the list today. The stock we're analyzing is Genpact with the ticker symbol G, and I've opened the chart on the weekly time frame once again. Now, this stock has a very similar horizontal breakout pattern to what we have seen in the previous stocks. Looking at the chart, you can see that Genpact made a high of $54 on December 27, 2021. That means for 3 years and 2 months, this stock has been consolidating below this trend line without breaking past it. But this past week, the stock finally gave a breakout. Now, while that is a strong signal, there is one concern that I have with this breakout. The stock has moved significantly, rising about 14% in the breakout move itself. So last week's candle was a big one, which tells us that momentum is strong, but at the same time, it also increases the chances of a retracement in the short term. So what should we watch out for? Well, I hope that even if a retracement happens, the stock does not fall below the $54 resistance mark. Ideally, we want it to trade above the breakout level and use it as a support rather than breaking below and turning this into a failed breakout. If the breakout holds, it could continue its upward momentum. But if it dips back below resistance, then we will have to wait and see if it gathers strength again before making another breakout attempt. Checking the exponential moving averages, the stock is well above both its 50-day and 200-day EMAs, so no issues there. It looks strong from a trend perspective. And looking at the historical drop, at one point, this stock had lost about 46% of its value from its previous high, but now it has gained back strength and is showing positive momentum. Now, some traders use this retracement percentage as a way to calculate potential upside targets. So if you are someone who follows that strategy, you can set your targets accordingly based on past price action. The company we just discussed is Genpact, ticker G. They're a business process management and outsourcing firm offering services across banking, insurance, consumer goods, healthcare, and manufacturing. They have a market cap of about $9.7 billion, making them a mid-cap stock. Revenue came in at $4.66 billion, and they earned $663 million in profit, leading to a profit margin of 14.22%. The PE ratio is 15.08, and the cash EPS sits at $3.64. If dividends matter to you, G provides a 1.11% yield. Now let's move on to the fourth company on the list. For the fourth company, we have Aspen Technology, Inc., with the ticker symbol AZPN. And just like the previous ones, it has a very similar horizontal breakout pattern. I have opened the chart on the weekly time frame for this one as well. Looking at the historical data, this stock made a high back in October 2022. That means for 2 years and 4 months, it has been consolidating below its resistance level. But finally, this week, it has given a breakout. Again, very similar to the patterns we have seen so far. Let's quickly check the exponential moving averages. And once again, there's not much to say here. The stock is trading well above its 50-day and 200-day EMAs, which is a strong bullish sign. Also, if you look at how these EMAs have behaved in the past, you can see that they have acted as support levels for this stock during its consolidation phase. Now that it is well above those levels, this further reinforces the bullish momentum. As for the historical downside move, at its lowest point, Aspen Technology had lost about 38% from its high. So, using that percentage drop, you can calculate your potential targets on the upside now that the breakout has happened. Now, in terms of strategy, I would personally wait for a pullback and a retest of the breakout level before making an entry. If the stock pulls back to the breakout point and holds, then that would be a much safer entry. Otherwise, chasing a breakout without a pullback can sometimes lead to getting caught in a fake out. The company we had a discussion on is Aspen Technology, ticker AZPN. They develop software for asset performance and management monitoring. Now, this one's a bit unusual. AZPN has a market cap of $17.4 billion, but their profit is razor thin. They pulled in $1.14 billion in revenue, yet only made $6.13 million in profit, resulting in a profit margin of just 0.54%. But here's the real kicker. Their PE ratio is an eye-popping 3,033.11, thanks to an EPS of just 9 cents. And for those wondering, there's no dividend yield here. On to the fifth stock for the day. The stock we're looking at is ATEN Networks, with the ticker symbol ATEN. And honestly, this has a very, very similar pattern to what we have already discussed today. So I won't go into much detail because the chart itself tells the whole story, but just to cover a few key points very quickly. The high this stock made was on November 7th, 2022. Since then, it has been consolidating below this level for nearly 3 years and 2 months. The stock is above its 50-day and 200-day EMAs, so the trend looks solid. The historical dip from its high was about 49% to 50%, which is in line with the patterns we have seen so far. So that's pretty much it for ATEN Networks. We have already covered similar chart patterns, so nothing new to add here, but this is another one to keep on your watch list and track its momentum going forward. The company we just discussed is ATEN Networks, ticker ATEN. They specialize in networking solutions focusing on security, hybrid cloud, and mobile carrier services across the Americas, Asia Pacific, Europe, the Middle East, and Africa. They're a small cap stock with a market cap of $1.5 billion. Last year, ATEN generated $261.7 million in revenue, earning $50.14 million in profit, leading to a profit margin of 19.16%. The PE ratio is 30.86, and their EPS is 66 cents. If you're looking for dividends, they offer a 1.17% yield. Now, I have a bonus stock for you as well today. The bonus stock we're looking at is Kellanova with the ticker symbol CASH. Unlike the previous stocks, I have opened this on a monthly time frame rather than weekly. And once again, the pattern is very, very similar to the ones we've discussed earlier, so I won't be diving deep into the details. But here are some quick facts. The high it made was $81.76 back in July 2016. That means this stock has been trading under this level for a massive 8 years. The breakout has finally happened, and the stock is now above its 50-day and 200-day EMAs. The historical low saw a decline of about 40% from its high. So that's the bonus stock for today, guys. Now, for those of you who have been following this channel for a while, our older subscribers, or even our existing subscribers, you might already know this. I am not an economics major, and I am not a stock market expert, but what I is software engineering. And that's exactly how I get these stock picks. I have built a custom program that scans the market and identifies breakout stocks using predefined criteria. Now, if you are not satisfied with just the 6 stocks that we covered today, I am putting the entire list of breakout stocks that have occurred over the past 2 to 3 weeks on the screen right now. So as you can see, this is the raw output from my program. It contains the name of the stock, the high it made previously, the exact date that high was made, when the breakout occurred, how long it took for the breakout to happen. All this information is right here on the screen. You can pause the video, go through the list one by one, and analyze the stocks on your own. This way, you have even more data to work with, and you can choose stocks that align with your own trading style and strategy. In the 6 breakout stocks that we have discussed, I have highlighted the importance of a breakout retest multiple times. So you might be wondering, why don't I just give you stocks that have already broken out, pulled back, and are now retesting their breakouts? Well, don't worry, I got you covered. I have found 3 stocks that have recently broken out, pulled back, and are now retesting their breakout levels, offering a potential opportunity if the breakout holds. So let's dive right into them. The stock name is Sterling Infrastructure with ticker symbol STRL. Now, I want you to look at this chart very, very carefully because breakout retests are one of my favorite patterns. Why? Because if the breakout level holds, the probability of an upside move becomes very, very high. So let's analyze this. This stock made a high on May 16th, 2024. Then what happened? A consolidation phase for about 4 months. So we are looking at May 2024 to September 2024, 4 months of consolidation. And then on September 19, 2024, we had a breakout. What followed next? A massive rally. From the breakout point, the stock skyrocketed by 50% in just about 2 months, hitting this peak around November 11th, 2024. Now, let's see what happened next. After this huge rally, the stock has pulled back and returned exactly to its breakout level. And this is where it gets interesting because this previous resistance has now acted as support. Look at the last 4 green candles on the chart. They have all started from the breakout level. This means buyers stepped in exactly where the breakout happened. This is the very definition of a breakout retest, a crucial level where buyers defend the price. Now, imagine if we had discussed this stock on January 28th, 2025, and you had placed an order right at the breakout level. From January 28th to today, February 8th, that's just about 10 days. And in these 10 days, the stock has already gained around 11%. Now, let's consider the risk side. If the breakout retest failed, the stop loss would have been minimal, around 2 to 3% based on your risk appetite. But since it held, you could have made 11% in just 10 days, a fantastic risk-reward ratio. This is exactly why I always emphasize tracking stocks at crucial levels. Instead of chasing random stocks, if you continuously have a fresh stream of stocks at important levels, you won't lose patience and enter suboptimal trades. And this also tells us something very important. If the stock moved from the exact breakout level, it means there were big buyers watching the same level. As retail traders, we don't have access to insider data, but tracking key levels like this gives us a massive edge. So if you don't want to miss more such stocks, make sure to subscribe to the channel because I bring these high probability setups on a regular basis. All right, let's move on to the next stock. Now that we've understood the breakout and retest pattern, let's keep it simple. I won't go into much detail for the next 2 stocks. I'll just show you the charts and leave it there. The second company that is retesting its breakout and the 8th stock overall is Jacobs Solutions. You can see that its chart pattern is very similar to Sterling Infrastructure, a breakout, a pullback to the breakout level, and now a retest. So there's no point in repeating the same details again. The third company that is retesting its breakout and the ninth stock overall is the trade desk, ticker TT. Again, same story. The stock gave a breakout and has now pulled back for a retest. So what's the takeaway? Keep these three breakout retest stocks on your radar. Sterling Infrastructure, STRL, Jacob Solutions J, the trade desk, TTD, and don't forget to track the 6 breakout stocks we discussed earlier as well. That's all for today, guys. If you found these stock picks valuable and appreciate the effort I put into making this video, please give it a thumbs up and leave a comment. It really helps the most. And if you think your friends or family would benefit from these insights, share the video with them too. I wish you all a very happy trading journey ahead.